This episode is a continuation of our discussions on the subject chart of accounts, where our focus previously was on its first part, which are these balance sheet accounts that comprise the top of the list. The account titles are for retail businesses like the grocery store. To complete our discussion on the subject, this time, on this episode we will define and discuss the continuation, which are these most common income statement account titles used in a trading or retail business, like a grocery store. Which are basically the following. 1. Revenue. This refers to the total amount of income generated by a company for the sale of its goods or services before expenses are deducted. It is also referred to as the top line, because it's located at the top of the income statement. 2. Cost of goods sold or COGS. This is the cost of a product to a distributor, manufacturer, or retailer. Gross profit is derived when we deduct the cost of goods sold from sales revenues. The cost of goods sold is considered an expense in accounting and it is part of the income statement. The formula or computation of the cost of goods sold varies depending on the nature of the business, thus the formula for trading business is different from that of a manufacturing business. 3. Salaries and wages expenses. This refers to the salaries that employees have earned during the accounting period, whether or not the company has paid the employees under the accrual method in accounting. The overtime and allowances of the employees are also included in this expense account. 4. Depreciation expense. This represents how much of a tangible asset's value has been used up, and this is computed using several methods. But for our discussion, we shall use the straight line method, which is allocating or dividing the cost of the asset by its useful life. An example of a tangible asset subject to depreciation is office equipment. 5. Amortization expense. This represents how much of an intangible asset's value has been used up, and this is computed using several methods. But for our discussion, we shall use the straight line method, which is allocating or dividing the cost of the intangible asset by its useful life or life expectancy. 6. Rent expense. This is the cost paid by a business for the use of a property or location for an office, retail or store space, factory, or storage space. When the rent covering more than one accounting period is paid in advance, say for example, 6 months, the total amount is divided by 6 months to get the expense for 1 month. The unused portion is recorded under the asset account name, prepaid rent account at the time of payment, and is gradually reclassified as rent expense each month, applying the matching principle of revenues and expenses. 7. Insurance expense. This refers to the amount that a company pays to get an insurance contract covering its personnel, and properties or assets of the entity. If the payment made by the company is for 1 year of coverage, the total amount is allocated or divided into 12 months to get the monthly expense. The unexpired portion is recorded under the asset account name, prepaid insurance account at the time of payment, and is gradually reclassified as insurance expense each month, applying the matching principle of revenues and expenses. 8. Light and power expense. This refers to the electric power used for lighting, to run appliances, computers, and equipment. The actual usage or consumption is measured through a meter located within the property. The meter is read regularly, usually monthly, and this is the basis of monthly bills sent to users who are bound to pay them on or before a given due date. Some companies record this item under utilities account along with water and natural gas consumption. 9. Water expense. This refers to the water used for drinking, washing, cleaning, watering plants, and cooling of a motor vehicle, etc. The actual usage or consumption is measured through a meter located within the property. The meter is read regularly, usually monthly, and this is the basis of monthly bills sent to users who are bound to pay them on or before a given due date. Some companies record this item under the utilities account along with electric power, water, and natural gas consumption. The drinking water on the bottled or plastic container is sourced from the grocery store and private providers, hence, their bills or invoices are the supporting documents to record the journal entry. 10. Transportation expense. This refers to the cost spent to move or transport goods from the source to the warehouse and store of the business. This also includes transport fees or fares of people tasked to perform business activities in different places, using various transport methods such as airlines, ships, boats, buses, cars, animal ride, motorcycles, etc. 11. Office supplies expense. These are consumables and simple equipment regularly used in offices by businesses and other organizations, by individuals engaged in written communications, record keeping. This includes, but not limited to, pins, glue, tapes, bond paper, pencil, and pen. 12. Cleaning expense. This refers to consumables used to maintain physical cleanliness and orderliness within the confines of the organization. It includes cleaning supplies such as detergents, liquid cleaning agents, garbage bags, bathroom tissues, maintenance of cleaning equipment, contract service, and trash removal. 13. Repairs and maintenance. This refers to the costs spent or incurred to bring an asset back to an earlier functioning condition or to keep the asset operating at its present condition. 14. Miscellaneous expense. This refers to expenses comprising of small amounts and infrequent transactions, which cannot be properly included in any of the account titles in the chart of accounts. This account should be used as the last resort.